TGIF face. How's everyone doing? Patrick, Kevin, BW, Catherine Zhang, welcome to face. Hello, Alex, Bob, Brian, Anthony Moreland, all you warriors, Ziggy Morrow, how are you? Okay, so we've been talking about the VIX for, I don't know, a month or so. I called it a beach ball that you keep pushing it underwater, and eventually I was looking for a breakout. Got it in a big way yesterday in the VIX. Everyone see this? So any guesses what I'm looking for? I call this a falling wedge. And what a classic example of markets bottoming in silence. I mean, look at the monthly here. If this wasn't a dormant picture of someone in a coma, their EKG in a coma. So the rule I was taught is you look for, when you have wedges, for 100% retrace. That would take it to 32. Of course, I have some other speed lines drawn out here. This one is way down the road, but if you just do like 1.618 of these here, you know, the mid 30s, 37-ish is possible. A lot of people don't think we're going to get there. This is still just a correction. I'm not going to battle with them, but I wouldn't be short the VIX, and we talked about it here in face. They're record shorts in VIX products. So I'm sure there was some short covering here, but you know what? It takes a long time to unwind big positions, and I'm sure a lot of people still have huge profits, even though we're here, especially on the VIX products, the derivatives, which have a normal decay on them. So, you know, they're probably saying it's one day, and I bet even the market gives them hope that, you know, doesn't get through 20. So 20 is where a lot of the bears are going to make their stand on VIX. Everyone with me? But I think that they're going to be squeezed so hard. This is going to be such a short squeeze that their eyeballs are going to be popping out of their head. Ever been caught in a short squeeze like that? Hi, Glenn. Hi, Reef. As far as the majors go, looking at the euro here, this is 1786. This is a monthly, that's why. So we have a little negative month working, still early in the month. I still think it looks okay. I'm more interested, I think we can make a move to clean out these stops here. Maybe not today, maybe early next week. But at the same time, I don't think we're going to make a new high. And that there'll be one more. I think this was just the first wave up in the dollar, or A. This whole thing's A, and now we're working on a B. Could get up towards 1820, make the bears feel pressure. But, you know, up around here, 1830, 1840, I'd be looking to short it. I think there's one more wave left in this correction in the dollar, and this was just the first. So I usually don't do, if there's a war, well, I don't know, Luca. You know, Congress has been pretty dysfunctional, and they're on vacation, and when they get back, they have 3-4 weeks to come up with a budget so we don't have a default. And as toxic as Washington is right now, I wouldn't put a default off the table. It'll just be a technical default, but I don't think the markets will like it. So that's another issue on the table. People aren't even talking about it yet, but they have to get that done by the end of September. It's not that far away, right? After our congressmen and senators are back from vacation. Okay, so that's my view. Luca's talking about Euro, Shabazz, Euro Aussie. That's something Nick has been on. I'm just looking at. And what a great week if you followed ForexAnalytix this week. The patterns in play were pretty successful, I think all but one. So Nick's out of it too. The only thing she has left is Euro Kiwi. Okay. This reminds me, I just want to touch on this one more time. You know, I got a lot of tweets about Euro Pound here. And some people are looking for this to be a right shoulder, head and shoulders top. And yesterday I said, you know what, this high bothers me. Okay, everyone remember that? That it was a confirmed high, even though it was a good scalp. And we talked about the scalp getting back inside the wedge line. But the momentum on this high was a confirmed high. So now if we do a little work and it looks like we have a 1-2 here, we pull back and we take out this high next week, and the RSI does not take out this peak, it's going to be a better shorting opportunity at new highs. So that's something else on my radar screen for next week. It's my hope, and maybe you guys could give a little input on it, between the guests that we've had and Blake's stuff and Steve's stuff and even your host stuff, that we've added value to what you're trying to accomplish as a trader this week. Because the mission statement of ForexAnalytix is to build up and edify traders every day. So the whole team, yeah, that's what I'm looking for, Jess. The whole team puts in many man hours to help you accomplish that. And if you're not aware of it, you need to click the link that we have right here. It's right under Welcome to Face. So a lot of great trades this week. Nick's, if you took Nick's silver long, if you're long precious metals, you paid for a subscription for a decade. Okay, so with that being said, I don't do a lot on Friday. Those are my thoughts. I have to admit it, by Friday I'm a little burned out. I get up at 3:30 in the morning now, and I'm not 29 anymore. I know you guys think I look 29, but I'm a little older than that. So with that being said, I think there's going to be some preseason NFL on this weekend, Blaker. You know, I have a hard time watching those preseason games. I mean, I like the fact that I see the field and I'm watching plays, but then I lose interest fairly soon. But it sure is great to have that back on the field. Who knows what's going to happen with North Korea? You know, I talked about this. Yeah, Jess. I talked about this about a week ago. I read an article, and the title of the article, you know, everyone says that it's unconscionable or unimaginable that there could be a war in Korea. And actually, there was a general that said it really isn't unimaginable. In fact, they're imagining it. You know, I pray it doesn't happen. Don't you, Blake?
Yeah, of course. It's yeah, unless you've had bullets flying by your head, which I have, and you don't really grasp the totality of war.
It's a one mistake business, isn't it, man? More than trading. People think taking a loss, losing money is a big deal.
Yeah,
put your life on the line. You know.
I'll tell you, I saw nothing like the generation before me and the generation after me. I was kind of the in-between generation, between the Desert Storm and then our invasion back into Iraq in the George Bush Jr. In Afghanistan era. So I was in between, but I took some shots. My platoon took some. Actually, my squad actually was more like it. in Somalia, and it's not it's
Wow.
very real.
I didn't know you were down there, buddy. Wow.
Yeah. Yeah.
So you know what, you deserved
Yeah,
being in Guam after that.
Well,
If it
yeah.
was after.
I'm a combat veteran. I've got my combat action award, and yeah.
Wow.
So
was that around the Black Hawk Down episode?
It was about 8-9 months before that. It was
Wow.
Christmas night of 1992. Actually, is when I got shot at.
Wow. You know, I think that's one of the reasons that you have the good heart that you have, Blake, is because you served, you learned how to serve as a young man, as a Marine, and you took that and you're serving. You don't know how many people, Blake, over the years, when I've been, working elsewhere or facilitating different rooms, that talk about you in the highest terms and how much they learned from you. In fact, a friend of mine, Dan Norberg, said that, he had a problem. His little girl was not doing well. And because of what he learned from you, he was able to quit his job and trade and be with her. So
that's awesome.
Isn't that, that makes that, all the aggravation that we have in the business, something like that you've made a difference. And you've made a difference in hundreds of people's lives that are trying to do this most difficult thing. So
well, thank you. And it's not just me. It's a team effort here. But thank you. We've got only a few minutes before CPI, so I really need to talk about the markets going into the CPI.
Go ahead.
But thank you, Dale. I appreciate that. I've taken off all of my dollar positions, and I'm gonna tell you guys that I don't know. Well, let's talk about yesterday. First of all, the stock market took an absolute beating yesterday. I mean, the Nasdaq was down 100 points yesterday plus. I was short. Well, I'm still short personally, and I'm actually short in our trading account too.
Congratulations, man. You stuck with it.
Thanks. I kept a portion of my position going into today, just partial. And I want to talk a little bit about how the markets reacted yesterday. So the markets reacted poorly on a weak producer prices data, and I don't know if we're going to get the same result today. I assume that the CPI comes in weaker than expected, but we could in turn get a continuation lower in the equity markets. But if the data is hot, I would venture to guess we are going to get destroyed in equities if the data is actually hot. The data is, weak like yesterday, maybe not so much, maybe just a little bit lower. We might try to probe lows, but if this data comes in hot today, then we're going to have a little bit of an issue. I want to talk a little bit about the NASDAQ here really quick, because if you take and the reason why I'm pointing this out, because it does influence what we're doing in currencies. Yesterday, we didn't see a lot of currency response to yesterday's sell-off in equities. The equity market really captured and captivated the entire FX market. So, when you look at this NASDAQ, the NASDAQ's still far away from a support zone, which channel support comes in, around 5,500. The 38% retracement of the election night lows to the highs comes in, around 3,450. So we still have some distance to travel, and if this RSI breaks down over here, then we'll probably end up seeing these levels. So for those of you that are buying equities, I still think there's some downside risk at this point. Now, how we translate that in the currency market is, if you look at the U.S. dollar Japanese yen, the U.S. dollar Japanese yen had a pretty clean break, And for me, what I'm looking for is if we get a move back to 109.60, I'm actually so on a hot number, the dollar should strengthen. But I think the stock market's going to weaken right after that. So if the dollar yen spikes up to 109.50, 109.60, I am a seller this morning. That's first and foremost. We've dropped down to we almost hit the 108.80, which we were targeting via ForexAnalytix. Let's see. Yesterday intraday update. I'm posting the daily chart so you can see how big of a break this is. We could see 108.80 first, 108 following. Now we went as low as overnight to 108.90. Now, and that was where we were trading at yesterday was it was like at like 109.20 or 30. Whenever I posted that, we came within striking distance of that horizontal support. But I'm going to take this and just do it like that. Anyway, that is pretty key. If the data comes in weak and the yen pairs get destroyed again, that's going to be really critical, because if we break 108.80, you got to look at every yen pair. And what's interesting about the pound yen, I posted this chart yesterday. I did a pattern in play and all sorts of stuff. And I actually tried to play this, and I'll show you guys. I tried to play this to the long side. I personally tried to trade it to the long side, and then
that 42 area Steve has been talking about, that was like the major area, that 42.
Yeah, so I tried to play to the long side yesterday, and I got long at like 142.62 or something, and I ended up getting out of it and reversing and going short. So I knew it was going to fail here once we came back down to the support. It just, all the yen pairs were breaking down, so I closed out the pip because every other yen pair was falling, and then I turned around and got short personally, and I actually closed it this morning, but I'm still looking to get short. I'd like to sell the pound yen, any move up to like 142.50. I'd like to get short again, even though the pattern in play is still in play. I'm personally going to reshort it. I kind of want to clear everything out ahead of the data, which I did. But you got the pound yen that looks awful. Aussie yen, we came down to the support yesterday. You look at all the yen pairs, all the analysis was basically, you can see how bearish the analysis is in these yen pairs.
So that was a feature, Blake. It did play out in currency markets. The yen crosses in the yen with the S&P break, and even though bounces could come, maybe what we're seeing is a signal of more risk off to come. I'm not talking doomsday, but you can make a case for like 2320, 2340 in the S&Ps. That's still quite a few handles from here.
Yeah, I think that's entirely possible, and I'll tell you that the yen pairs are. I think people are wrongly positioned in the yen pairs. I think a lot of people still have it in their head that the dollar yen's heading to 200, and seeing these massive moves in like the euro yen, that following the French elections are like, oh man, this thing's going to 150, and I think a lot of people are just getting caught wrong-footed here. So I like them all on the short side, not shorting them right now. I'm just saying I like them all as shorts personally, and I have no positions on right now on any.
So we need a bounce in the S&Ps for you to get these positions off, partner.
Yeah, I mean, but listen, I don't know if the S&P is going to bounce. I mean, we had a really big breakdown. We hit that 161% extension in the S&P here. We hit that 161% extension and reversed hard. If the S&P breaks through like 2420, which we're at 2435, there's not going to be a lot of bounces. NASDAQ already looks horrible. Look at the Russell 2000. That really broke down. That led it. I mean, that's disgusting. The Dow is crack-a-lacking a little bit here, and the Dow, I mean, we got a lot of downside ahead in the Dow if it really wants to open up. You know, so okay. Anyway, a couple of things that when I'm looking for the dollar, I'm looking at the U.S. dollar Mexican peso. It's still outside of this channel, knocking our head up against the 618. This thing breaks through 1805, and we're off to the races. I was long overnight, sold it, took some profits. Just nothing big. I mean, nothing to write home about. Just little bits and pieces here. I was long the U.S. dollar Norwegian krona overnight. As it went through 97 to 99, I got out like not too far away from here, like a couple pips away from here. But the U.S. dollar Norwegian krona, this thing could really break higher. And you got to be careful being long the dollar, especially with the Trump effect, if you will, because I don't know if the dollar is going to be the safe haven that everybody thinks it's going to be or would be. I don't mind being short emerging market currencies. I don't mind being short commodity currencies, but being long the dollar against like the euro, the pound, the yen, the Swissy, that's not my cup of tea. We might be in a situation where we, you know, go to war, and not only your normal type of war, but with a country that could really cause severe damage, and we could be leading the charge. So I don't know if I really want to be long the dollar in this type of situation unless it's against commodity currencies or emerging market currencies, which should get hit harder than any other currencies in any type of conflict type of situation. So that's why I'm looking not so much at the euro, which I still think looks extremely bullish here, but I'm looking at, you know, currencies like maybe the Aussie that could give us a big time false breakout here. You know, if we break back below 78.40, which we tested overnight. I mean, you know, we break through this support here, and you know, I don't know if the Kiwi is going to come or the Aussie is going to come back. The Kiwi looks like crap too. You know, the Kiwi's trading heavy. You know, all these currencies that are commodity related or emerging market related, those are the ones that I really would like to target to the short side. So again, playing the dollar long against those, not so sure. And if you want to really just stay away from the dollar, you want to stay away from the dollar is you go look at some currencies like maybe the Euro Aussie. I mean, the Euro Aussie, look at this. I tried playing this to the short side, and I took like a quick 20 pip loss in this yesterday. But take a look at this bad boy. You know, if the Euro Aussie breaks through 151, I mean, I know we're at 149.50. We break through 151, forget about it. This thing's going to be trading about 155 to one, you know, maybe even higher. And that's a risk off type of trade. You know, you want to talk about risk off. You buy the euro against commodity currencies. Look at the euro Mexican peso. I love this trade right here. This is one you don't want to carry too long because the carry costs associated with it are huge. But man, this currency pair right here, the euro Mexican peso, if we go risk off and the peso starts selling off, this thing could really take off here. And I like trading the euro Mexican peso for, you know, a couple days at a time. I know a lot of you can't trade it because your broker may not allow it, but that's something that I like to trade quick. I come in for a quick kill on those ones. So anyway, just you know, some food for thought here as far as the markets go. I think that the dollar's a little tricky to play. I think the yen is the place that you want to be on. You know, if the yen, you know, if these yen pairs bounce a little bit, they're the places you want to be. And that's the way I'm trading it right now, Dale.
Okay. You know, I agree with you. You know, Ziggy asked a good question, Blake. Yeah. About, you know, over the weekend. I don't think a lot of people are going to want to go home long because of the weekend risk, Zig. I'm talking equities. I think most people want to just, like you're worried about the weekend. And then if nothing happens over the weekend, or maybe even rhetoric is tapped down a little bit, then I think you get a relief rally early next week. In equities, it'll be a shorting opportunity. And maybe Blake gets his pop and yen crosses to get short. So that's just, I think, a possible scenario, Blake.
Yeah, the question is, something major happens and price runs past stops. What are your thoughts on risk? I mean, I don't know if I really understand your question, Ziggy, but I mean, like,
Ziggy's known for that.
Well, the problem is if something happens over the weekend, you've got to be, whatever stops you have, they're getting blown past, and you know, unless you're like, I fortunately, like for me, I use JP Morgan, which is an institutional platform, so I can actually execute trades about 3 or 4 hours before you guys can, because there's pools of liquidity. I can start exiting early on Sunday. Most of you can't, so you're kind of stuck. And I mean, it doesn't mean I'm not stuck either. It's just I have a little bit more flexibility. But you know, if you're out there and you got exposure, you got to think twice about how the market is going to react if something happens, heaven forbid. You know, if something devastating happens, the gaps in the market could be major, and you have, you know, and if you're positioned wrong, that could be career ending. You know what I mean? You like literally, you could actually end your trading career over the weekend if you're positioned wrong. So I would highly advise that you think quadruple times about what you're holding, and think about what the ramifications. You know, go into the weekend saying, all right, Guam was attacked by North Korea. How does the market react? And if it reacts a certain way, can I sustain that type of move? And if you can't, then you know, you're probably best getting out until Monday. You know what I mean, or Sunday night. So that's my thoughts. Because you're helpless or hopeless, both. Yes, Steve. Good morning.
Good morning, mate. Good morning, Dale. Good morning, everybody.
Hi, Steve.
I think especially this weekend, Blake, going into the weekend short gold, crude, or long risk is a very, very dangerous thesis to have, right?
Yeah, because your best case scenario is nothing happens. And then, you know, and then the stock market, instead of being down, is up a little bit. It's not like it's going to be up 3,000 points. The S&P is not going to be up, you know, 20% because nothing happens. No, the S&P will probably be up.
But the opposite can happen, exactly.
But the
same with gold.
Right.
Same with gold. Same with crude. Yeah.
Yeah, you happen to be long the market, and then you know you're short gold, and gold could be trading at 1350. You know,
guys, I remember the prelude and the run up to the Gulf War I, and the markets for about 8 weeks into the run up of it remained under pressure, bottomed on the day bombs flew in Baghdad. So maybe we have a similar analog here. You know, this isn't going to go away even if there isn't any kind of missiles flying over the weekend. This is going to be an overhang on the market now. Every little thing, and it could be for a few months.
Hey, I'm sorry, we have data coming out in less than a minute, but I want to state that the best position is probably no position. Why put yourself in a stressful situation over the weekend? There's just no sense. Okay, stand by. We got CPI, and then I'm going to pass it right over to you, Steve. I need to go trade.
Okay, mate. Okay, mate.
But CPI data will be coming out here momentarily. We'll just watch the reaction in the dollar yen. This should be the cleanest reaction.
Thanks, Blake.
Oh, my pleasure. I'm just standing by for the data to come out here. Ooh, I have no dollar position, so just kind of standing aside. Oh, wow. Weak data. Wow. Holy cow. My God. All right. I'm going to pass it over to you. I gotta go.
Yeah, USD yen is drilling. Okay, Blaker.
Right,
good luck.
All right, here you go. Here you guys go. Week data. Holy moly.
Yeah, and as always, USD yen is the first one that reacts to it. Let me share my screen as well. Okay, let's see first the reaction of the data, and then we have a lot to talk about. First of all, the USD yen is currently testing the previous low here. We've clearly closed below the triangle support yesterday. You know, a close below this low as well. Obviously, then we have a different structure at hand. Perhaps a different kind of channel, but as I wrote yesterday in analysis, especially if we close below here, I think that 106 level is more than likely going to be tested. So obviously the initial reaction to the weak CPI, and keep in mind we also had weak PPI yesterday, and keep in mind from a macroeconomic perspective, PPI is a prelude to what is going to follow with the CPI, because simply when the producers' prices increase, that means that sooner or later, usually within a few months, these kind of price increases are going to be passed on to the consumers. So usually when you see strong PPIs mean that, you know, you're going to have a tick up in CPI in the future months, and the opposite. So we both had a weak CPI, and the core, and let me see, 1.1 US real average weekly earnings also underperformed a little bit. So in essence, all the data we were expecting today were either what was expected or weaker. So you know, the dollar reaction is to be expected. And as I said, yesterday's PPI shows that there is a good likelihood that you know, CPI is not about to tick up in the following months as well. The vast majority.
There's your new high in euro pound. We got it. So I'm looking into next week for potential.
Keep in mind, since you're mentioning the euro pound might have kept producing new highs, but we're still within the wedge.
Yeah.
So you know, yeah, and the wedge is tightening. So you know, don't jump the gun here, because
don't jump the gun. But one of the conditions that I needed was the high that we had, I don't know, about 5 days ago. This high is not being confirmed. We're already coming off a little bit here. So we do have a divergence. We didn't have a divergence for the correction from 90.90 to 90.10. Now we do have a non-confirmation.
By the way, Blake mentioned it yesterday, and I also wrote it to analysis. Mentioned it today, sorry, and I also wrote it to the analysis yesterday night. I want to have a look at the Euro USD, a close look at it. Look at it. Euro USD for 3 consecutive days has been testing the waters below 1750. Okay, 11750. Each one of these days, it actually failed to close below it. Just by seeing these 3 candles, these 3 consecutive candles, somebody didn't need to be a rocket scientist to understand that there is strong buying interest down at this level. And today's candle proves that, you know, these kind of wicks that were produced there were not by accident, which means that, simply speaking, there is absolutely no reason at the moment to believe that this was another bull flag at a very strong market, like this. So be very, very careful with the Euro USD, because it can easily pop to new highs and test 119.63, which is the 127 of this move lower, easily. I mean, currently there is absolutely no reason to be bearish. We had a reason to be bearish after we saw this very nice evening star formation here, but that's why you also need to see follow through. But then it became obvious that there is strong buying interest just below there at 117.50, as I said. And as long as this level holds, you have no reason to be bearish. I understand why you wouldn't want to buy it up here. I absolutely understand it. Where would you put your stop loss? Okay, of course, for a short-term trade, you can put it below here. But on the other hand, be very careful if you want to be short, because you know it's a dangerous thesis at the moment. when you see such a strong formation as an evening star formation and such a weak follow through as the one we had, you know, this is troubling. This is troubling, and Euro USD remains very well bid, and that's why Blake mentioned it as well. We don't forget that we had a timely article about the euro and the pound pairs. You know, what was it, 1 month ago or more than that? We already talked about them, and we said, you know, that they look strong and bullish. And if you have a look at them, the euro Aussie is breaking above a consolidation and most likely heading to new highs. The euro Kiwi tested the highs. Initially it got rejected, but you know, I see no reason why we shouldn't have a continuation higher. Obviously the euro pairs should be preferred in comparison to the pound pairs, and it's simple to know why. If you inspect, you know, the euro USD and the cable, you know, it's obvious that there is a divergence here, which also is being displayed obviously through the euro pound. Although, as I said, you should be careful with the euro pound because, you know, it's still on an ascending wedge, and this is a formation that can you know, reverse in very little time and, you know, produce a reaction. Speaking of wedges, we showed yesterday this ascending wedge in the SPX. We closed below it. We had shown several days ago, and this is very, very important, and we need to stress this out, this wedge in the IWM, but the problem with the Russell is the following. Not only the Russell broke first and warned about, you know, this ascending wedge, but the Russell is also probing at the moment the 200 DMA and this ascending channel that has been working since the end of 2015. So the Russell at the moment is testing extremely critical levels. I mean, if we rebound from here, fine. Still, even if we rebound, watch 138.75 for resistance here. But if we penetrate through it, you know, things become very dangerous for the Russell, and very, very often we saw that in the previous financial crisis as well. The Russell has been leading the larger capitalization indices. Okay, so keep that in mind, and keep in mind also that Russell at the moment is testing 30 RSI, which is like, you know, levels you usually see tested, especially if we probe below it at bearish trends, or anyhow when a trend is actually reversing and not at bull trends.
You know, Sarge talked about it, that they really need, since they're domestic, they need the new a new tax package, and also the headwind of a weaker dollar, which helps transnationals but not domestic U.S. companies. So that's why they, you know, a few reasons why they've been lagging, and that's all.
By the way, no real surprise there. But the reaction to the negative prints today is positive for stocks. So the Nasdaq is already bid like 0.4%.
Yeah.
The SPX is 0.3% higher at the moment. But given
and the euro is getting to levels I talked about 15 minutes ago, that I'm not going to do it today, but I thought we could go 1830. We're only about 17 pips from there.
Yeah, but keep in mind that
pretty good guess, huh?
Indeed. But by the way, I hope everybody remembers what we said about the Dow the day it reversed, right?
Yeah,
exactly.
That was yeah. You nailed it, that presentation. That's why I said, Steve, you know, I'm pretty active on Twitter. In fact, I go to TA meetings, Twitter Anonymous, you know, and I know you. And I know that you guys, you know, you're a little shy, but I love to brag about all the great work that takes place in here. And I put it out on Twitter because using the sessions, a few different sessions that we were warning people, and the session where you were showing the fact that, you know, 9 days in a row ended up being so even if you didn't guess the right day, that day we had a key reversal. Now we have a reversal week, even though we're bouncing. I mean, a key reversal week in the S&P. So
Indeed.
Yeah, I don't think a lot of people that were listening to us got caught long S&Ps. Or
Needless
NASDAQ.
to say that we have been discussing about this wedge in the VIX since a long time ago, and this is what we had to do. And actually, if this gets confirmed, this is a huge break, because in essence,
Yeah.
this wedge dates back to 2015 August.
Yeah.
So it's like this is a 2-year wedge which we're currently breaking. Okay.
Yeah.
So if this doesn't come back within the wedge and proves like to be like a false, move out of it like ASAP, this is a huge.
Maybe we get a pullback to the breakout. That's about all I would.
Perhaps, but the thing is the following.
We may not get one because there's so many people short the VIX products right now.
That's what I wanted to say. Think of how crowded the short volatility trade is and was, and think of how anxious these people must be feeling seeing this chart at the moment, right?
Yeah, except they believe the Fed has their back, right? You'd say they sell volatility, the PPT. So
yeah, but everything works until one day it stops working, as we've seen it several days in the past, not in the recent past, but in the past, right?
Yeah.
Okay, so that's it having to do with indices. So we had a fast look. Let's have a fast look at the Nasdaq as well. Let me not forget Nikkei. We also warned about the. Why the hell are my ticker symbols? Okay. Nikkei was the first one that tested the ascending wedge. We said that that was a critical level, and it sliced through it like it was butter, and the horizontal support as well. Yesterday, actually, I think when we had the webinar, we were testing this area, and I said that listen, we are already below the ascending wedge, especially if this area fails, which is 19,600. I said that you should expect the 19,000 level to be tested, and we're already more than halfway there, simply because these levels are important. I mean, I'm not only monitoring these levels, the market is monitoring these levels, and I really think that 19,000 is going to be tested. The 200 DMA is also here. Keep in mind that we haven't closed below the 200 DMA since October 2016 in the Nikkei. Okay, so we almost tested it today, but this is a major break here. This is a major break. I really believe that most probably we're going to test here the confluence of the 61.8 fib and the horizontal support at 19,000, and we see what happens from there. But already some technical damage has been done to the Nikkei as well, and we see this clearly in the yen as well, as we said. So let's see where we close today, but especially close below 108.80. Is another breach of another important level. We're already below the triangle, and 106 is very, very likely to become the next target here. Okay.
I know that there's been some biases for being, Blake never, but some biases for being bullish yen, like Nick and Greg. They're looking for a low to set up in here. And remember, for the last several months, Steve, we've been talking about the potential bearish scenario where, we retrace all of the election gains, and that the weekly would have that this is a big C wave on the weekly.
Yeah, and it might be the case. So you mean like an A, a B, and a C?
Yeah,
then? Yeah. Can happen.
Well, when would you think that
through risk aversion? Yeah.
Doesn't this week make it a little bit more likely that that's what's happening here?
Yeah, it does. It definitely does. It definitely does. And since you mentioned it, and since Greg, as I said, is indisposed because of personal matters for this week, but we're going to have him, with us starting next week. I mean, on the webinar, because he's doing analysis every day for the company, of course.
And you're actually taking a vacation. I saw that on Reuters.
Yeah.
That Steve Volge is taking a vacation, which is not as usual as.
No.
Belly
It's
up.
totally, yeah, it's indeed unusual, but
I heard
Your life is a vacation still.
yeah.
no, it's not. I have 2 young kids. It's never a vacation.
Okay,
That's very true. That's very true.
You're the Robinson Crusoe of ForexAnalytix. You go from island to island.
Yeah.
All right. So, Grega.
Let's see what Grega was expecting. Grega was expecting a triangle, and you know, I'm not sure if we've already reached the invalidation level. It's quite likely, but he's still expecting, you know, this move to be corrective. He thought that this is a double zigzag from what I see, an ABC X, ABC Y. We need to see his analysis, you know, today or tomorrow morning, whenever he does it, to see if he really thinks that this invalidates this view and he can give an alternative view, or this view is still alive. So obviously with today's break, you know, we might be invalidating this view. So his view was for a bigger triangle, that, you know, all this, since we picked almost at 120, that all this was a big a triangular consolidation, an A, B, C, D, expecting then another dip to E, and, you know, a new high. So let's see if he thinks that today's bridge is, you know, should constitute, you know, indeed a view, a change in his view in the market, and if that's the case, he will definitely, you know, refresh the charts and give his alternative view. What is his main view now? But as I said, the situation with the yen is not very much straightforward. I mean, we've spent, if you think about it, we've spent like all 2017 or all of 2017 being more or less in a major consolidation. Okay, of course, this might be like a bigger structure. You know, that's one move. Then this triangle was a consolidation, and then a new move unfolding to the downside. You know, we need to do some more analysis and see, but from a basic technical analysis perspective, as I said, I think 106 is now likely to be the next target, and definitely, if we do break below here, from this point on, 109 is going to be resistance, because it's also going to be, you know, these lows here, and also the broken triangles support that can, from this point on, act as a resistance. So obviously, you should now be viewing the USD yen more with a bearish eye than a bullish one, or at best you can be neutral, but definitely there is no reason to be bullish, at least not for the time being here. But let's go and cover some of the. Thank you, Arif. I shared the few profit of the day, and nice to hear that. Best trades for the weekend: EJ, GJ shorts, Aussie USD, Kiwi maybe. Okay, let's have a look at them one by one to begin with. Euro yen. The problem with Euro yen is that it's currently creating a hammer in the first area that we expected some support, okay? And given the euros, the fibers, Euro USD's resilience, I would say that if you really want to be short a yen pair, you shouldn't choose the Euro yen to be that. Okay, so that's quite simple. What's this level? We had already marked this area as an area of support. We are seeing a reaction here with this hammer, and regardless, since euro is overperforming the vast majority of the currencies, this is not your preferred currency to be short the the yen pairs or being long the yen. On the other hand, we had warned plenty of times about the pound yen's critical confluence, because we had a triple confluence actually here, and today we're clearly trading below all of those, and this is a very, very bearish outcome, because this now makes it very likely that since the high here, what we get is a 1, a 2, a 3, perhaps, etc., 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 which means that if you want to be short something at the moment, probably the pound yen is the way to go, because this is a major technical
I
break.
think we take out last October lows. I presented the weeklies about a week or so ago, but I thought we might hold 52. I don't know how to get on board now. I can't just launch here. But
yeah, I agree with you. But and keep in mind that this is not a fresh view that we had. We drew it since we were there, exactly there, that there are two scenarios: a leg lower and a reaction from this trend line and new highs, or a move lower, a breach of this trend line, and a resumption lower. So, either case, we expected a new low from up there. We got the new low, but the way we're slicing through this area makes it now that this scenario, which was our second preferred scenario, is the most likely to happen, which means that it's very likely that we're going to see more weakness coming up in the pound yen. Okay. Now, having to do with Aussie USD and Kiwi, first of all, I have to say that my idea remains that we've seen so many lower closes in the Aussie USD, but still price has not moved so much.
Yeah, it's grinded down.
Yeah, translation, I don't like that as an impulsive move. I would not be short the Aussie USD at the moment. Okay, I'm not saying that it cannot accelerate lower, but I'm seeing that the move I'm seeing so far is uninspiring for a bearish move in my mind. I might be wrong, but I don't want to go against what my gut tells me, because more often than not, it proves to work. So that's what I see here. Obviously, Kiwi has behaved in a much more bearish way. There's absolutely no question about it. Still, it's holding at the moment this triangle's breakout point, okay, because you can view this as a triangle as well. And I wouldn't be short here, if that's a question. So I wouldn't be short either of these two currencies from current levels. So I wouldn't suggest any of those shorts, not at current market values. Okay. Having spoken about those two, we can have a look at the Aussie Kiwi as well. Aussie Kiwi has yesterday failed to actually close above this descending trend line, and today it's probing it once again, but it doesn't. So what we said remains. Okay, we can remain constructive as long as we are above 1075, but we still haven't seen this close above this descending trend line. And until that happens, I remain cautious. Okay. By the way, thank you, Zach. Yeah, I'm going to enjoy vacations, but keep in mind that I will be doing daily analysis, and I'm going to even be joining the webinar, probably not on a daily basis, for the upcoming week, but I'm going to be here. USD yen is turning, false break. Let's see what you mean, because we just saw it a minute ago. No, I can't call it a false break yet. Yeah, we do. We are reversing some of the losses, but we still remain, below this trend line. Of course, if we don't close below 108.80, it will keep alive the chances of this being a triangle, at least from an Elliott wave perspective. Okay. But no, I wouldn't say that this is a big turn and we might push lower later in the day. So, I'm a person that usually doesn't trade from short-term charts for a reason. Let's wait to see how the daily candle closes, and we take it from there. Obviously, let's say if it moves lower and we close at 109.50 and we actually get a hammer, it's going to be a completely different discussion than if we push even lower and we close with a black candle or a Marubozu closing black. Okay, so let's wait for the end of the day and we take it from there. But that's why I don't like to pay so much attention to intraday movements, because they create a lot of noise in essence. Okay, and I don't get in trades for 1 or 2 hours, so why would I want to get chopped up in 1 hour candle noises or 4 hour candle noises or 30-minute candle noises or whatever?
I want you to trade on a tick chart on your vacation.
Oh yes. I remember the first time in my life, that I opened a trading platform like 10 years ago, or whatever it was.
1 minute chart or tick chart?
I don't remember what the default charts I opened were like something extremely short term. Tick charts, 1 minute, 5 minute. I don't remember because to me it's all the same. I mean, it's nonsense.
I call those are broker charts.
Yeah.
Because it's all for the broker and can make you broker.
You're absolutely right. And you want to hear something, Dale? I'm not going to disclose, my trading volumes or whatever, but I can tell you one thing for sure. I checked the commissions I've paid during the last 3 years, and keep in mind, as you remember, I rarely trade intraday, and I've paid around $25,000 in commissions in one account. Okay, commissions and overnight. Yeah. Imagine what people pay for trading like intraday and entering, exiting positions like constantly.
Sounds like fun, man.
Yeah.
Yeah. So,
metals, by the way, because I see a lot of interest. Okay, gold just a while ago almost reached the 1295 resistance. It's now pulling back. Obviously, if I told you to be long up here, it would be foolish. I mean, so close to resistance. So I really understand why some people would want to be short very close to this resistance level, but I can tell you one thing for sure. You don't want, on the other hand, to be short during the weekend, because if we get, I said it before when I interrupted Blake, if we get some escalation of the geopolitical situation during the weekend, gold can easily gap up above this resistance zone and never look back. Okay, so on one hand, under normal circumstances, I would completely understand why would somebody want to be short up here, because the reward to risk ratio would be amazing. But in this case, you should be very careful if you actually want to do something like that. Because if you get unlucky and we get an escalation, this might prove to be a runaway gap. Silver, on the other hand, got rejected from our first resistance here, 1720. I wouldn't call this, it's still an inside day, by the way, so calling a rejection immediately just by having an inside day, wouldn't be prudent. We had 4 consecutive up days and strong ones. This can easily just lead to a retest of 1670 and another move higher. So don't jump the gun, thinking that, okay, this is it, silver is done, because this does not constitute like a major reversal or anything like that.
Yeah, Nick came out, did pretty well on.
I understand. I see Arif asking, Arif says that Nick came out and that was a great trade because it's selling off, and I agree with you, but still I would hold off before calling this a major reversal. Okay, we need to have more evidence for that. Okay, the initial reaction from a zone we had marked as a resistance zone counts, of course it does, but until we get a break below 1670, I think that there is no event here to talk about. Okay, so that's my position about silver at the moment, and I have no position in the market. I'm just saying my point of view, not my position, to be exact. Okay, so let's see what other USD Swissy. Yeah, the USD Swissy is also something that you don't want to toy around at the moment, because as I said, the Swissy itself is one of the currencies that will see a lot of buying interest if things go south having to do with risk. So the Swissy, I was a major, if you remember, since a long time ago, I was a major advocate that the Swiss is going to go lower and a lot lower because the sell-off in the Swissy was genuine, and I was striving to persuade a lot of people that it was genuine. But on the other hand, ahead of a potential war, as you understand, people that were selling Swissy have completely stopped doing so, and perhaps have been reversing this flow. So let me be clear. If you see the situation with North Korea clearing up, I believe that the Swissy sell-off is going to resume, and this buying bout that we've had the last 2-3 days is going to reverse immediately. So this is going to be a great opportunity to sell the Swissy, and I'm not talking about the USD Swiss at the moment. I'm talking generally about the Swiss currency, and we can talk about which counterparts will be ideal to do so against. So in this case, for example, in this case, this is going to be an amazing opportunity to buy Euro Swiss. If you see the situation clearing up already, look what we get today, and this is. You remember how long ago we drew this, Dale?
Yeah.
That perhaps we get a retest of this broken trend line. Let me zoom out so people can see how old this trend line is. Do you see it now?
Yeah.
And what did we just get? A retest of this trend line, right? So in this case, for example, on the other hand, this is going to be a perfect retest and never look back again if the situation with North Korea, clears up.
Escalates.
Yeah, de-escalates in this case. Yeah, because people are going to be selling again the Swiss against the euro, seriously selling it. So I expect new highs for the Euro Swiss to come, and I'm pretty convinced about it, as long as we don't get something major happening with the North Korea situation. Okay.
Steve, JC is in the house.
Okay.
JC.
Oh, I'm very sorry. I didn't see that we went through it.
All-Star Charts.
Okay.
I worked pretty hard to get JC to show up here. I'm glad he's here.
Perfect.
JC.
Enjoy your interview, and the rest of the questions we will cover on Monday.
All right. Have a great vacation, Steve. You deserve the rest. Enjoy. Smell the roses, and see you next week. All right, JC. Okay, bye-bye. JC, I'm making you the presenter. So looking forward to hearing your voice, seeing your screen, seeing some of those all-star charts that you have on your radar.
How's that, Dale? You hear me okay?
Yeah, I got it, JC.
All right. So
Very nice to meet you.
Likewise. Thank you. Thank you for making this time. My schedule's been a little all over the place. So I appreciate you working with me. I'm definitely glad to be here, talking charts. Listen, I'm open-minded.
I love your Twitter description. You build puzzles because the market is like a jigsaw puzzle, isn't it? Trying to put all the pieces together.
It's the most fascinating puzzle I've ever tried to put together. I was a puzzle kind of kid, I suppose, maybe just like anybody else. But the fact that it's never complete, this puzzle that we call the stock market, and there's always new information and new data. So you're constantly having to reevaluate any prior thesis based on new data that's coming in, right? Which it just doesn't stop coming in. So there's always a period of reevaluation that I think that we all need to be doing. Some do it more responsibly than others, which seems clear. So I pride myself on consistency, I suppose.
Well, I'm glad you brought up that you started as a little boy, because I'm always interested in how someone got involved in this industry and who was responsible and who were their influences. So maybe you could take us back to the beginning of your journey to where you are now. How did you end up in this industry?
Sure. Well, we can take it back to 1982, right? So this is the year that I was born, right?
Oh, you were
1982.
born, were you born in August? That was the beginning of the long-term bull market, August
No,
82.
no, Dale. You see, I'm a leading indicator, so I was born about 6 months prior. So it was kind of,
Good one. You knew what was coming. You knew you had to get in there, so you were already front running the market before it turned.
somebody has to, you know. No, I mean, listen, my father, you know, neither one of my parents were, you know, to this day still are not huge market participants. You know, they have their 401k. You know, I was born in an era with, you know, 15% interest rate. So
Right.
theoretically, you know, it's funny. I hear my father say, there was no reason to be in the stock market. I'm getting 15% at the bank, you know, which it's funny because that was precisely the time to be getting into the stock market. So, you know, just
Right.
just really interesting. And my mother is an advertising exec, so neither one of them were really in it. You know, in college, I played baseball at Division I level at Fairfield University in Connecticut, and you know, I just wanted to play baseball and party with girls. I mean, that's just what it is. You know, I didn't care so much about the, you know, not about, I would think about the future, but I knew that as long as I buckled down and got good grades, that it would eventually, you know, work itself out. I had an internship in Merrill Lynch while I was in school, and that really pointed me in the right direction. I knew I didn't want to work at Merrill Lynch, but, you know, I didn't like the big shop, so I knew that, you know, really pointed me in the right direction.
So did you start off as a Series 7 guy and hit the phones?
Yep, I did that early. I was able to do a lot of things, right? You know, I was on the analyst side. I did some investment banking. I built some hedge funds. So I really got a chance to, you know, kind of do a little bit of everything. But listen, the bottom line was that, you know, technical analysis, it was clear to me that, you know, that's really what set me apart from everyone else. You know, it's very, very clear. And it seemed like I was the weird one, you know, looking at charts.
Yeah, everyone, it was all fundamentals, earnings, and you were visual, and you liked looking at patterns. Who influenced you technically? Was it someone like John Murphy, or I'm wondering what books you delved into to eventually we all come up with our own style. That's what Jack Schwager says, you know.
Yeah.
Find a style that suits your personality, but along the way, I know I had influences. You know, I still talk about a 3-drive formation that I learned from a guy in the 70s, J.R. Hill. So who influenced your work?
Well, no question. I'm a John Murphy disciple through and through.
Oh, I guess right.
Yeah,
so that you were into the intermarket relationships too.
100%. You know, a few years ago, I was at an event, and John Murphy was scheduled to give a presentation. And he was late. I forgot traffic or something like that. I kid you not. Had he not shown up, I could have given that presentation for him. And you know, it was funny because I used to always tell my assistant that I'm a John Murphy disciple. I'm a John Murphy disciple. And then after Murphy gave his presentation, she comes up to me. She's like, "Oh my God, you really, really are." You know.
Yeah.
And then Schwager. I mean, there's, you know, I recommend those Schwager books to everybody. You know, I know my friend Peter Brandt reads the Schwager books once a year. He reads them again. You know, and so that's I definitely recommend all the Murphy books, all the Schwager books. Even if you're not trying to be a hardcore technician, if you take your portfolio seriously, I mean, start reading those books like yesterday.
Okay, well, thanks for sharing that, buddy. And I did go to your website and your blog, and what a great time to have you on with the market finally coming under pressure. I know your long-term stance is constructive until the evidence changes, and I'd be curious as to what the market would have to do. Yeah, there you go. So you're looking for oversold conditions. So you're viewing this as a long-term bull. You're licking your chops for buying opportunities now, correct?
Yeah, you know, I mean, that's basically been the trade. You know, if you know, last week I even said, you know, instead of reiterating upside targets, instead of, you know, talking about the good things that we're seeing out there, you know, why don't we talk about risk management and really focus on the things that we want to see to really change our perspective? And I kind of laid it all out, you know, some of the things that we were looking at. So if you go to the blog today, go to allstarcharts.com. It was posted this morning. You know, it basically says what we're looking for to change that short-term thesis. And I think a great way to explain it is by showing this chart here.
Yeah.
This is the S&P 500, 2015, 2016, right? So
Yes.
this was a key. This was our target. This 2110 level in the S&P 500, going back, going back several years. So we knew that our target had been achieved when in 2015, when the market was really consolidating and digesting those prior gains. So the question was, okay, are we going to resolve higher and resume the uptrend, or are we going to roll over? And then as soon as prices broke those lows, call it 2040, that had been support throughout 2015, that broken support suggested that now there was a problem. Now all of that overhead supply was now in place, and sure enough, that later came to be. But one of the things that really confirmed that things had changed from a strategy standpoint, where we were now in a sell any strength environment in 2015, was the fact that we were also getting oversold in momentum. So I use a 14-period RSI. In this case,
Yeah, I do too.
Yeah,
I renamed it. I renamed the RSI.
Oh, did you?
Yeah, I call it the real simple implicator.
I like that.
Because of what it implies. Now, I would have read that, and it did end up coming true, that first circle you have in August, after that was with the yuan devaluation. To me, that's a confirmed low, and confirmed lows rarely are the bottom in the market. So it proved out to be true, even though you had a big rally. The true low came at a higher divergence level in January. New price lows, higher real simple implicator lows. So
yeah, I couldn't agree more. So I think it's a good example. So if you're wondering now what it is that I'm looking for, I think understanding where I was coming from in 2015, 2016 would really help, right? So you mentioned the confirmation. I take it you mean that we got oversold on this August decline. Is that what you're referring to?
No, not just oversold, but the RSI made a new low along with price. So it was a confirmed low. The momentum confirmed the move.
Got it. Totally. Yep. So you and I clearly look at our side similar ways. You're right. Confirmed low for sure. I think what's even more telling for me was the fact that it got oversold, because if we're in uptrends and market's making new highs, in this case the S&P 500, momentum's going to stay above those oversold conditions. Momentum's going to fail to get oversold. So the fact that we got oversold was another further evidence suggesting to sell strength, not buy weakness. And then when we did rally and run into that overhead supply from the rest of 2015, momentum didn't get overbought, essentially reiterating the fact that we're in a bearish range, and this is still a sell strength environment. So here we go. We make new lows in January, not a surprise to us at all, right? This was a short all day. And then momentum got oversold again, really continuing to confirm that we are still in a sell strength environment. But on the new lows in February, momentum stayed out of oversold conditions. So
yeah,
that was the first major sign that, hey, things are different now. And we were getting long, very aggressively long, all throughout this weakness here, right?
Nice.
But we still did not have an answer as to whether this was just a counter trend rally within a bigger structural decline, or whether this was the beginning of something new. Just because we knew we wanted to get long didn't answer the question of time horizon. But then upon that rally, when we got overbought in the spring, entering the second quarter of 2016, that was warning number 2 that things were improving. Because if this was really the disaster that it had been, momentum certainly would not be reaching overbought conditions on this rally. So signal number 2 that things are getting more positive. And then sure enough, during the summer correction, momentum stayed out of oversold conditions, right?
That was Brexit.
Sure. And not only that, but we didn't get oversold. But this was the point where interest rates bottomed. This was the point where European banks bottomed. So it wasn't just one chart that suggested, hey, we need to be super aggressively long, or hey, things have changed. It was really a collection of all of them.
The John Murphy's leaking out of you.
There it is, right? I can't help myself.
Okay, so we've had this phenomenal run now, and the recent low was the election low. Carl Icahn left the party and went and bought $1 billion worth of futures, and it's been off to the races, only consolidating. And so where are you at now?
S&Ps?
Yeah.
So I think it's pretty clear here that we've had a nice stair step higher, right?
Right.
But this
Yeah.
is almost no longer the case, right? And
Yes.
this kind of makes you sort of question what we're seeing here.
Yes.
Listen, if we're below, if you know, I can even give it to 2,400 depending on your time horizon. But listen, we made new highs, right? Let me just take off this crosshairs. We made
Glaring divergence.
glaring divergence. Momentum did not get overbought at all. So this is a problem. We're breaking uptrend lines, and you know, this resistance here, this form of resistance, this is important, right?
Is new
So,
support.
Yeah, I mean, listen.
So under 2,400, would that change the long-term picture for you, or would it take even would have to get under, say, the old highs of 2,130 for your view to change?
Oh, well, that 2,130 is still another 200, you know,
Yeah.
300 points lower. So from a risk management standpoint, I think that's a bit much. So yes, I suppose from a structural perspective, longer term, if we get down there, then the implications longer term, of course, could certainly change. I don't look that far ahead. So, you know, my time frame, while I don't care what happens today, I also don't care what happens next year. I'm more interested in what's happening over the next few weeks and few months, right? I'm trying to make money this quarter, right? So I like to call that an intermediate term time horizon.
Okay.
So that's kind of where I look right now. And yesterday was an ugly day, and you know, there's absolutely no question. So what we're looking for is those oversold conditions. If we start to see those oversold conditions, that's going to suggest that at the very least, we have more time of consolidation and digestion moving forward, and a more cautious stand is certainly due. So, you know, the market's going to close today, and I'm going to rip through 1,000 charts, every single stock in the S&P 500 on weekly and daily timeframes to really come up with that weight of the evidence, you know, sort of conclusion.
How long does it? You're a hardworking guy, then, JC. How long does it take you to do that?
You know, it depends on how much has changed, right? I mean, if not much has changed, I could rip through those in 2 seconds, right? I mean, not 2 seconds, but it'll be a lot quicker. If there's been dramatic changes that I need to, you know, really do some analysis and break down these sectors, you know, it's going to take me longer. I'll get it done today. You know, I'm in California, so I'll get going.
Where are you at? I'm in Temecula. Where are you at?
I am in Sonoma Valley, California.
The other wine country.
Oh, yeah.
Yeah, all right. Go ahead.
So, you know, I can get going around 1:30, you know, about half an hour after the market closes, you know, get a cup of coffee, you know, throw on some good music, and then just start ripping. And I go sector by sector. You know, I start with the energy stocks, you know, and then within the energy stocks, I go in my order. You know, I start with the integrateds, go to the oil services, you know, drillers, the explorers and producers. Then I'll go into financials, and then I'll start with the big guys, and then the regional banks, and then the insurance stocks, and then, you know, I'll go to the industrials, and then I'll go to railroads and truckers, and, you know, work my way aerospace and defense. So I'll go sector by sector, breaking it down sector by subsector, every single chart on a weekly time frame and a daily time frame. I also add a few charts that are not part of the S&P 500, but I still think belong with certain groups to really kind of help me get that weight of the evidence sort of conclusion. And then, you know, once I've ripped through, you know, 1,000 or so charts, I have a much better idea as to what's happening internally, because it's not so much one index. It's what's in that index. And I find the internal process of going through all 1,000 charts much more effective than just pulling up a chart of S&P futures, you know?
Okay, so when you came on and first showed your screen, I think you were showing an oil-related index.
Energy, yep.
Okay, so this has been a laggard during the last quarter or even the whole year. I mean, we had that big low last January. And actually, I'd say that oil stocks kind of underperformed, but they're starting to look, maybe there's going to be some rotation in there. I know you're a technician. I am as well, JC, but I have a thesis that, you know, was a falling wedge last year, and the top of the wedge was 62. So I think we could get to 62 in WTI. But my thesis is that crude will hold up and maybe even advance into Saudi Arabia's IPO. That, you know, they're going to move heaven and earth to keep the price of oil up until they could bring in bag holders for their IPO. What do you think of that?
I like your conspiracy theory.
You call it what it is, but I mean, haven't you seen that in stocks where the market will get pumped up? You know, you think about like when, you know, Google and Facebook and a lot of these things were IPOs. They came public when the market was near all-time highs. I mean, that's a time to do it when the underlying asset class that you're an instrument in is doing well, not when it's doing poorly.
Listen, Dale, I'm the son of a conspiracy theorist, so I hear you. You know, I'm with you, brother. You know.
Well, you might be young enough to be my son too. So
I've been hearing about JFK.
That's hilarious. So
I've been hearing JFK and Nixon's theories my whole life. So no, I mean, listen, I like where your head's at. I appreciate, you know, your optimism. I mean, that's not how I think personally. I look at this crude oil chart and it just looks like a hot mess. I mean, it looks like how I used to wake up in the morning after college parties. You know, I mean, it ain't a pretty sight. You know. Yeah.
Okay.
I think it needs some time to recover. I mean, I'm a big fan of staying away from things near a flat 200-day moving average, and we're right at that sucker. You know.
Yeah, so it's a non-trade. It's a no trade.
Listen, if I never trade another oil contract for the rest of my life, I most likely live a longer life. No.
Okay. All right.
I'll get involved if and when I need to. I know that the double bottom in early 2016 was a home run. You know, they've had opportunities in the past. Listen, I mean, it's right. I mean, this is the sheer definition of a lack of trend. So I just, you know, I agree. This looks more like a bottom than a top. You know, I'll give you that all day. But it doesn't necessarily mean that we're trending higher. I mean, it's just a clear lack of trend. So I think it needs time. Yeah.
Okay. So what else do you have for us today that is on your radar screen? What groups? I know you haven't done all your weekly work, but I'm sure you have some biases of things that you think could be decent buys on this correction in the market. Okay, so emerging market currencies.
This is no. Here we're looking at these are industrials relative to the S&P 500. Okay.
Okay.
And I just see 1, 2, 3, 4, 5 tests of this level. You know, Dale, where I grew up, you know, these are continuation patterns. You know, this is something that should resolve higher. I mean, considering how many tests of this resistance, this overhead supply. So, you know, I'm waiting for that to the upside. I think that would be extremely constructive. You look at something like Caterpillar, right?
Wow. Yeah.
You know, you have a big, nice base in Caterpillar. You know, are we going to break out, or is this just further resistance? You know, so I'm looking at these. I'm looking at these charts, and I'm saying, okay, is it ready to go? This probably looks a little extended. I'm looking at the Dow Jones Transportation Average. That has been a great leading indicator for a while. Notice how the transports peaked
earlier,
2014, 6 months before the S&P 500.
Right.
Bottomed in January, the month before the S&P 500, right? Yeah. So we want to see leadership out of these. I love the fact that we have not gotten oversold at all in momentum in the transports. If we can conclude this consolidation and remain above those oversold conditions, then we can go on and move on to new highs. But if we get oversold, then, you know, Dale, that's going to be evidence that we probably still have some more digestion.
Or indigestion.
Or indigestion, yeah, right? Depends how long you are.
Yeah. Okay, so the trannies lead. Where are you at on, you know, there's a lot of positive things. You ever pay attention to what's happening in mining shares? Yeah,
the gold mining specifically?
Yeah.
Yeah, you know, I know Gunlock, Jeffrey Gunlock now, he's an avid technician, which I certainly appreciate. You know, I guess this is what he's looking at.
And
you know,
he's
looking at a textbook symmetrical triangle or whatever it is. I don't know about all that, but it does look interesting. I'm not long gold miners. I'm waiting for some more information here. I'm not completely convinced. I'd like to see a little bit more strength out of silver, you know, because that's, Dale, that's where the crazies live. They live in the silver. So if you're going to get, if you're in a situation where precious metals are doing well, you know, silver's going to be participating. In all likelihood, it's going to be outperforming gold.
So you keep an eye on the gold-silver ratio to give you an idea?
Absolutely. Absolutely. Okay. Look at a gold-silver ratio and then overlay it with silver over it, right? You know, they look very similar. I mean, you can even look at an SLV GLD just to, you know, keep it simple, stupid. You know, this doesn't look great.
Higher lows still, but yeah, interesting. You know, I know the crazies. I was around during the Hunt squeeze.
There you go. You know, I wasn't.
I mean, I'm a historian and a conspiracy theorist. So
there you go.
All right. So you're not seeing anything here that is telling you that silver's going to lead the way.
Listen, I'd love to, because this trade right here was one of the best trades of my entire life. You know, this failed breakdown here. I mean, this was as clean as it gets. Listen, I like partying with the crazies just like anybody else, but I don't need to live with them. You know, like some choose. I got to pick my battles here, and this was a home run. I mean, this was a grand slam, but it's been dead ever since. So, like, yeah, if you can't beat them, join them during this time here for sure. I loved being with the crazies, but the crazies remained, and they get crazier and crazier as prices approach the apex. You know, I'm just not there yet. This is what I'm looking for, Dale, not this.
You know, you had a similar false breakdown in the euro, just like that. It took out the 104 level, 105, and went to 103, and then straight ahead. See, similar false breakdown there?
No question.
Yeah, same thing. I love those. False breakdowns are the best trades because, as Blake would say, everyone's wrong-footed and ready to be squeezed.
From failed moves.
Like what's happening in VIX derivatives now.
Yeah, so, you know, they're on the wrong side. You know, speaking of conspiracy theories, one of my conspiracy theories, you know, and we've seen it a few times, like once a month, you'll get that unwind of that short position because you got all these commercials. They're loaded up on VIX shorts, so they get squeezed out. You know, the market gets adjusted accordingly, right? Because of the positioning, because it's based on the S&P 500. So it takes it in the chin for a day or two. Everybody gets squeezed out of their position, and then the market continues and volatility gets absolutely destroyed. So we've seen that happen again and again and again for months. Is this month's version of that, and now we can continue and VIX gets slaughtered? Or is this the start of something new?
I mean, I think it's different. It broke out of a wedge once we cleared, I don't know, about 14.
Yeah.
So, you know, I think it might be different this time. How about a reversion to the mean anyway? Like, you know, the VIX in the 20s. It's not, you know, it used to be normal, 15 to 25. And this was subnormal.
Yeah, I'm not a VIX technical guy. Like, I don't like drawing trend lines on VIX or anything like that. I'm more of
only conspiracy theorists draw trend lines on VIX. So you know what? I wanted to bring this up. You had a great
if it fits your narrative, right?
Yeah, if it fits my book, if it's with my book. You had a great event about 4 or 5 months ago called the Chart Symposium.
Chart Summit.
Okay, Summit. Yeah. How did that go?
It was unbelievable, Dale. I mean, you can look at the presenters here. You know, really what it was. I get invited to do, you know, all these like webinars and stuff like that all the time. And, you know, I found myself getting invited to some of these webinars, and, you know, they were just, some of the presenters were just terrible. I mean, it was just, it was an embarrassment. You know, the fact that, you know, people would even sit there watching some of this stuff. I mean, I kid you not.
And I've interviewed a lot of these guys.
So then I was like, you know what? I could do this much better. Let me call up some friends and see if we could put something better together. And to be honest with you, I didn't think they'd all say yes, but they did. So it turned into, you know, this. And, you know, we had over 10,000 people, 100 different countries all over the world. I got 500 emails from people thanking me for putting this together. And honestly, I would have done it if I was the only one listening, because, you know, I've learned from all of these people. Brian Shannon, you know, talk about false moves. This is Mr. From failed moves come fast moves in the opposite direction. Phil
Okay.
Perlman, Dr. Phil, I mean, legend.
Yeah.
He's just awesome. Charlie Valello, great work.
He's a
Krinsky, all these guys.
psychiatrist too. I think Phil is also a licensed psychiatrist, so he probably helped you out.
He's a shrink. He's always psychoanalyzing me. We're having beers, and he's like checking me out. Oh, and they're off.
You're just missing one guy there, Mr. 3 Drive. You know.
Oh,
who that
yeah,
is?
there you go.
That guy Pinkert.
There you go.
Maybe for your next one.
We'll get you on this year. What do you think?
Yeah, I'm game. You know, I like both sides of the microphone. I'm a Gemini.
There you go. You understand that Charge Summit is January the 27th because 1.27 is the square root of 1.618.
You know what? Besides being a great technician, I really had a blast talking to you today, JC. It was worth everything you put me through to come.
I doubt it was so bad.
for you to come on and join us. So, I'm very glad to have met you. Glad I reached out, and thank you so much for your time and your edification. And you know what? I even learned some new things how to use RSI.
There you go.
This talk that we had. So, like to call you from here on out, my trading warrior brother, JC Peretz. Everyone, thank him. Have a great weekend, ripping through your charts, JC. Open a bottle of red, and maybe one day we'll get together and raise a glass together.
Oh, I'd love to do that. You're down in Central Coast?
No, I'm just outside San Diego in the wine country, Temecula, California.
Oh,
So,
I didn't know there was a wine country. I guess it was.
Yeah, I mean there are vineyards here all over the place. So
Cool.
it's it's kind of like paradise here in Temecula. It's not the ocean. But I'm telling you, I get ocean breezes 20 miles inland. It really.
I love it.
surprises me.
I'll be down there in October. I'll definitely make sure to reach out.
All right, JC, have a great
All right,
weekend,
you
and
too.
I hope that profits rain down on you and your subscribers the rest of the year.
Likewise, my friend.
Thank you, JC.
All right.
Okay, everyone. Thank you, Face. Hope you had a great week, and we'll see you on Monday. And remember, don't just count your pips, count your blessings. Thank you very much, Arif. Thank you, Blake. Thank you, Steve. Have a good trip, Steve. Thank you, Stelios, Grega, Nick. Adios, my trading warrior brothers and sisters. Enjoy your summer day.